We also talked with Bernanke about the chances of a recession. Here's what he had to say.
The more the Fed has to tighten in order to get inflation down, the bigger the chance of a recession and the more severe it will be. How much the Fed has to tighten depends in turn on what happens to these factors they can't control, like the supply chains and the commodity prices. So that prediction requires you to make a prediction not only about the Fed's behavior, but about a lot of other things, the Ukraine war, et cetera. So it's a very hard thing, very uncertain thing to say. I guess that I still tend to believe that some of these forces pushing up inflation, like the supply chains, like the preference for durable goods over services, and some of the commodity price increases, gas prices and so on, that they will at least stabilize and begin to moderate sometime during this year, which would mean that inflation will come down to some extent, let's say by itself, but without the Fed's direct intervention. If that happens, the Fed would have to raise rates perhaps moderately above neutral, say in the threes somewhere. When they do that, they'll slow demand. But as Jay Powell has pointed out, the economy is pretty strong. We're not going into a recession as often is the case with a troubled economy. In fact, the underlying economy, as we recover from the pandemic, is quite strong. We have a very strong labor market, for example. We have a strong financial system. We have strong balance sheets. So if the inflation slows, as I expect it ultimately will, although I've been disappointed about how slow that process is, then the Fed should not have to raise rates too far. And what we would get then would be a slowing of the economy, maybe even a stall, but not a severe recession. The severe recession would only come if these other factors simply do not cooperate. Right. And in particular, the thing people should watch most closely is inflation expectations. If inflation expectations, as measured by break-evens in the inflation-protected securities market, as measured by surveys and so on, begin to move up in a significant way, people have lost confidence in the credibility of the Fed will have to react much more strongly, and the effects on the economy will be much more deleterious.
And how concerned are you about that?
For the moment, knock on wood, this is a big difference between today and the 1970s. In the 1970s, inflation expectations were all over the place, and nobody had any confidence in the Fed that it would bring inflation back down. Today, most indicators suggest that people are still pretty confident that the Fed, or maybe some combination of the Fed and the end of the pandemic, will lead to more normal inflation in the future.
We couldn't have a conversation without talking about Bitcoin. Take a look at this. Bitcoin right now down a little under 30,000. And in Bernanke's new book, he writes about the potential of the digital dollar. So, of course, I asked him to share his point of view on cryptocurrency these days. This is what he had to say.
So Bitcoin and other currencies, cryptocurrencies whose value changes minute to minute, they've been successful as a speculative asset. And you're seeing the downside of that right now. But they were intended to be a substitute for fiat money. And I think in that respect, they have not succeeded. Because if Bitcoin were a substitute for fiat money, you could use Bitcoin to go buy your groceries. Nobody buys groceries with Bitcoin because it's too expensive and too inconvenient to do that. Moreover, the price of groceries, the price of celery, varies radically day to day in terms of Bitcoin. And so there's no stability either in the value of Bitcoin. The main use of Bitcoin is mostly for underground economy activities and things that are illegal or illicit. So I don't think that Bitcoin is going to take over as an alternative form of money. It'll be around as long as people are believers and they want to speculate in this. But again, I don't think it's going to. And you
don't buy into the idea of it as being a store of value or some kind of version of digital gold.
Well, as I said, it's a speculative asset, but it's one that whose underlying use value, gold has underlying use value. You can use it to fill cavities. The underlying use value of Bitcoin is to do ransomware or something like that. So one of the other risks that Bitcoin has is that it could at some point be subject to a lot more regulation. And the anonymity is also at risk, I think, at some point. So, investors in Bitcoin should be aware of that.